When most people step into trading, they think it's all about charts, strategies, and indicators. They believe the secret lies in mastering technical analysis or finding that one perfect entry pattern that guarantees profits. But here's the truth that nobody tells you. Trading isn't a game of skill alone. It's a game of patience. The market doesn't reward the smartest person in the room. It rewards the one who can wait. You can have the best trading system in the world, but if you don't have patience, you'll destroy your account faster than any losing streak ever could. The irony is that trading looks like action, clicking buttons, entering positions, watching candles move, but real success comes from inaction, from waiting, from sitting on your hands when your emotions scream to do something. And that's the part most traders never master. Because patience doesn't feel good. It feels boring, uncomfortable, and uncertain. Yet, it's the very thing that separates those who consistently win from those who endlessly chase. Once you understand that trading is not about how often you trade, but how long you can wait for the right trade, everything changes. Most traders don't lose because they don't know how to trade. They lose because they can't wait. It's that simple. The modern world has conditioned us to expect results instantly: fast food, instant notifications, and same-day deliveries. So when a trader steps into the market, they bring that same mindset. They want quick profits, fast gratification, and immediate confirmation that they're right. But the market doesn't care about your need for speed. It moves on its own time, not yours. And when impatience takes over, traders start forcing trades that aren't really there, entering too early, closing too soon, or flipping strategies midway. They treat trading like a slot machine, not a business. This is why many end up overtrading, taking 10 trades when one would have been enough. They think they're missing out when they're really just burning out. Patience, on the other hand, protects your capital. It keeps you from reacting to noise and forces you to act only on confirmation. Most traders lose not because the market beats them, but because they beat themselves by not waiting long enough for the odds to swing in their favor. To understand why patience is so hard in trading, you have to understand human psychology. Our brains are wired for instant gratification. Every time you see a setup forming or a candle move in your direction, your brain releases dopamine, the feel-good chemical that makes you crave more action. This is the same chemical that drives addictions. It rewards the anticipation of pleasure, not the reward itself. In trading, that anticipation becomes dangerous. You start entering trades too soon because your brain wants to feel that excitement again. Then, when trades go against you, fear kicks in, and you exit too early to avoid pain. It's an emotional loop: fear, greed, hope, regret, repeating endlessly until you learn to break it. Patience breaks that loop. It's the act of stepping outside your emotions and observing instead of reacting. It's choosing logic over impulse. And that's not easy. It requires emotional maturity to sit on your hands while others are making money and trust that your time will come. True trading mastery doesn't come from predicting price, it comes from mastering yourself. The more patient you become, the quieter your emotions get, and the clearer your decisions become. For years, I struggled with patience. I thought I had it all figured out. I had studied charts, read books, and watched every tutorial I could find. But every time I saw a setup forming, I jumped in too early. I'd move my stop loss because I couldn't handle seeing red. I'd close trades the moment I saw small profits, afraid they'd disappear. And the worst part? I convinced myself I was being disciplined. In reality, I was just being impatient. I was addicted to the feeling of being in a trade, not the process of waiting for the right one. It took me blowing a few accounts and facing the harsh truth before I understood that patience wasn't just a nice quality to have, it was the difference between surviving and quitting. The turning point came when I forced myself to stop chasing. I told myself that if the market doesn't give me what I'm looking for, I'll wait even if it takes days. That single shift changed everything. My trades became more calculated, my losses smaller, my emotions quieter. And over time, I realized that trading success had nothing to do with how much I knew, but how well I could wait. Patience turned my trading from chaos into control, and from noise into clarity. Patience in trading isn't just about waiting for the right trade. It's about surviving every phase that tests your discipline. The waiting phase, the holding phase, and the losing phase. Each of these stages challenges a different part of your psychology, and if you fail in any of them, your entire strategy falls apart. The first and hardest phase is the waiting phase, the silent killer of most traders' success. This is where real discipline is built, because doing nothing is often the hardest thing to do. The market will tempt you with half-formed setups, fake breakouts, and sudden spikes that make you feel like you're missing out. It will whisper, "Just enter now, you'll figure it out later." But that's exactly how accounts die. Every profitable trader knows that not trading is a position too. Patience in the waiting phase means trusting your edge, trusting your setup, and accepting that the best trades don't come every day. The market rewards those who wait for confirmation, not those who crave action. You protect your capital by being selective like a sniper waiting for a clear shot, not a machine gunner spraying bullets. Waiting keeps you rational. It filters noise from opportunity. It's the discipline of saying no 100 times before saying yes once. Then comes the holding phase, where patience is tested in the opposite direction. Now you're in a trade, the setup played out, the entry is clean, but this is where emotions hit hardest. You watch the market move up, then pull back, and your brain starts screaming, "Take profit before it reverses." Most traders fail here because they want certainty, but in trading, certainty doesn't exist. They cut their winners short, thinking they're being smart when they're really just afraid. The irony is, holding onto a good trade is harder than cutting a bad one. Patience in the holding phase means letting the market breathe, trusting your analysis, and sticking to your plan even when the candles move against you temporarily. You don't need to predict every tick you need to survive the noise. True profits come from holding your winners long enough for them to grow. Every great trader learns that the biggest moves often happen after most people have already exited. Patience here is what allows small wins to become life-changing gains. And finally, there's the losing phase, the part of trading everyone experiences but few handle well. Patience in this phase isn't about waiting for profits, it's about waiting to recover emotionally. Losses hurt, not just financially but psychologically. The moment you lose, your mind shifts into revenge mode. You want to make it back instantly. You open another trade out of frustration, not logic. And that's when you dig yourself deeper. Patience in the losing phase means accepting that losses are part of the process. It's resisting the urge to jump back in, analyzing what went wrong, and waiting until you're mentally ready to trade again. It's understanding that every trader, even the best, loses, but the difference is how they respond. Impatient traders spiral, patient traders pause, reflect, and adapt. The truth is, patience doesn't just save your money, it saves your mindset. It stops you from making emotional decisions in emotional moments. Patience isn't just an emotional skill, it's a financial weapon. In trading, time has a compounding effect that only the patient get to experience. Most traders underestimate how powerful slow, consistent progress really is. They want big wins now, not realizing that real wealth in trading grows quietly through small, controlled victories repeated over time. Think about it, one good trade doesn't make you rich. Hundreds of well-disciplined trades executed with patience do. Every time you wait for a confirmed setup, avoid a forced trade, or let a winning position mature instead of closing early, you're adding invisible interest to your trading growth. Patience protects your capital, and protecting capital is the first rule of compounding. Once you stop losing unnecessarily, your account stops shrinking, and that stability becomes your foundation for exponential growth. Over months and years, those small percentage gains stack up in ways that surprise most traders. The impatient trader chases 100% gains and loses it all. The patient trader compounds 5% a month and becomes financially free. That's the irony of trading. The slower you move, the faster you grow. Patience multiplies not just your money, but your understanding, your consistency, and your control over the markets. It's the hidden force behind every profitable curve and every long-term success story in trading. Patience cannot exist without emotional control. They are twins. One cannot survive without the other. Emotional control is the ability to feel fear, greed, frustration, or excitement and still make rational decisions. It's what keeps you from buying too soon, selling too early, or holding too long. Every market movement tests your emotions, and if you don't master them, they'll master you. Most traders think the key to emotional control is to suppress feelings, but that's wrong. The goal isn't to eliminate emotion, it's to understand it. You can't stop your heart from racing when the market spikes, but you can train your mind not to react impulsively. That's where patience comes in. Patience acts as a buffer between stimulus and response. It gives you space to think, to breathe, to observe. Emotional control is built over time through repetition, reflection, and honesty. It's built every time you wait for confirmation instead of forcing a trade, every time you stick to your plan despite volatility, and every time you accept a loss without emotional reaction. When emotional control and patience align, you stop trading the market emotionally and start trading it strategically. You begin to realize that the market doesn't reward those who predict right, it rewards those who behave right. In trading, time is your silent advantage, the factor most traders overlook because it doesn't feel exciting. Everyone wants to time the market, but the truth is that the ones who truly win are those who spend time in the market. Every day you stay consistent, every week you study your trades, every month you reflect and refine. You're gaining an edge that impulsive traders never will. Time exposes your strengths, highlights your weaknesses, and reveals the truth behind your strategy. It shows you that trading isn't about one lucky streak, but about staying disciplined through countless market cycles. The more time you give yourself to grow, the more the noise fades and the patterns become clear. But the impatient trader never experiences this clarity. They jump from strategy to strategy, system to system, always seeking the shortcut that doesn't exist. Time rewards patience by giving you something experience alone can't buy: wisdom. The ability to recognize when not to trade, when to scale, and when to walk away. The traders who last 5 or 10 years in this business are not the most talented, they're the ones who let time do its work. They let patience and consistency compound into mastery. Building patience isn't just about saying, "I'll wait more." It's about developing habits and systems that make patience part of who you are. One of the most effective ways to train patience is through structure. Have a written trading plan that clearly defines your entry rules, exit rules, and conditions for sitting out. When everything is written, emotions have less power over you. Another powerful tool is a trading journal. Every time you act impulsively, write down what you felt and what it cost you. Over time, this builds self-awareness, the foundation of patience. You can also use practical tools like setting alerts instead of staring at charts all day or limiting yourself to a certain number of trades per week. Meditation, exercise, and even stepping away from screens can help calm your nervous system because impatience often stems from mental clutter. The goal isn't to force patience, it's to create an environment where patience becomes natural. When you remove distractions, create structure, and track your emotions, You'll start to notice that you no longer crave constant trading activity. You'll begin to appreciate the stillness between trades, the quiet space where clarity and control live. When you finally master patience, everything about your trading changes. Your decisions become clearer, your emotions quieter, and your results more consistent. You stop chasing every move and start letting the market come to you. You no longer feel the anxiety of needing to trade daily because you understand that opportunity doesn't vanish, it cycles. You develop a calm confidence that most traders never experience. You start protecting your capital with the same care that you once recklessly risked it with. Over time, your account starts to reflect your mindset, stable, disciplined, and growing. But perhaps the greatest reward of patience isn't financial, it's emotional peace. You stop being at war with the market and start being aligned with it. You realize that trading isn't about control, it's about acceptance. Accepting that the market moves how it wants, when it wants, and your job is simply to respond wisely. Patience gives you power, not because it changes the market, but because it changes you. It transforms you from a reactive trader into a strategic one, the kind who doesn't chase luck, but creates consistency. In the end, trading is not about how fast you make money. It's about shifting from a get rich now mindset to a grow rich slowly mindset. The truth is, fast money is emotional money. It comes quick, but it leaves quicker. Smart money, however, is patient. It waits for confirmation, compounds over time, and never risks emotional ruin for temporary excitement. Once you master patience, you stop seeing trading as a rush and start seeing it as a craft. You become less of a gambler and more of an investor in your own skill set. And that's where true profitability lies, not in predicting the next big move, but in controlling your next reaction. The longer you stay patient, the smaller your mistakes become, and the bigger your growth gets. The market doesn't reward the quickest, it rewards the calmest. Because in trading, the one who waits wins.